Welcome back. You're with us here on Street Smart Trading Day. The SGX still very, very muted. We've got Ruchit Jain joining us on the phone line. Ruchit, thanks for being with us. What's the kind of range you're looking at, Ruchit, especially in the absence of any immediate cues at the moment? How do you expect markets to really shape up over the next few sessions?
Good morning, Abha. If we just observe the last few trading sessions, and Nifty has been trading in a broad range of 8650 and 8300. Probably we've seen that markets reversing from the high level of 8650 and again taking support around 8300. So broadly speaking, Nifty is still trading in this range. I think for short-term traders, 8400 would act as a support, and on the higher side, 8650 would continue to act as a resistance. But if you just observe the markets apart from Nifty, then other indices are doing quite well. For example, CNX Mid-Cap Index is trading at its all-time high in spite of Nifty being range-bound. So there's a lot of things going in the markets apart from the stocks which are there in Nifty. So we are advising our clients to trade with positive biasness in the stock-specific action rather than doing any trade in Nifty. So we are still expecting positive biasness, and on the higher side, 8650 is the resistance level, which if crossed, will lead to a medium-term positive outlook for the markets. But as of now, it's a stock-specific market, and one should continue trade with positive biasness in the stocks which are doing well.
Fair enough. But, Ruchit, since you mentioned about some of the other indices beyond the index as well, beyond the benchmark, what about the Bank Nifty? That's approaching that 19,000, 19,200 level, which has been a strong resistance in the recent time. In any strategy when we talk about the Bank Nifty, because that's probably the only strength in the market in the last few days as well.
Yeah, Priyank, if we just see the Bank Nifty, then there's a falling trend line resistance around 19,100. Even before the policy action, yesterday RBI's policy action, when we spoke, we said that 19,100 is the resistance, which if crossed would lead to continuation of the positive momentum in the banking sector. Now, if you see, majority of the constituents of the Bank Nifty are from private sector banks. And in last few days, what we have observed is positive momentum going ahead in PSU banks.
That's right.
So that's why we have not seen such sharp up move in the Bank Nifty. Now 19,100, if this resistance is crossed, maybe in today or tomorrow's trading session, then we would see these private sector banks, which are the larger constituents such as ICICI Bank, Kotak Bank, Axis Bank, these would come into play and start showing positive momentum. So PSU banks have already shown a decent rally. Going long from current level will not give you a favorable risk-reward ratio, although the positive biasness would stay over there. But the risk-reward ratio now won't be favorable to go long PSU banks. So if 19,100 is crossed in Bank Nifty, I would suggest to go along in a private sector names such as Kotak Bank or Axis Bank, which would start showing positive momentum above 19,100 in Bank Nifty.
Right. Ruchit, I'm just looking at some of your strategies here. Let's just go through them one by one. I notice you have a sell on a Bajaj Auto. Is that post-earnings, or is it looking a little stretched right now? What do you recommend there?
Yeah, Bajaj Auto, if we just observe the weekly charts, and it has made a double top around 2,650. We observed that in the month of December 2014, around 2,650 was the high. And after a decent rally in the past few months, again it has formed a bearish pattern around that resistance area. So we are expecting a corrective action in the stock, although we are not very much bearish from positional perspective on the stock. But from trading perspective, a short-term corrective action could come. So this call is only for short-term traders, and one should not know if anyone is a long-term investor, then one should continue to hold on. So short-term traders can look to go short on this stock for a target of 2,400, and one can place stop loss about 2,560 for this.
All right, you've got a call going on Hindalco as well, as what we've been seeing in terms of the way that stock's really panning out as far as Hindalco is concerned. And some of the metal counters have got a little active, is what we've been seeing. Is Hindalco the top pick in this little bit of a technical rebound that's underway for the metal pack?
Yes, Priyank, I think it's been almost a year when this metal packs are correcting. They started correcting in the month of July 2014. So probably after 1 year of corrective action, now the things are very much an oversold zone in weekly as well as monthly charts. And this stock, Hindalco, has probably ended a complex corrective pattern near the lows of 100. If you just observe weekly, monthly charts, then there's a triangle going on, and prices are currently trading at the lower end of the triangle. So we are expecting a sharp pullback rally in this. And as we generally see that when stocks or market is in a downtrend, the pullback rallies are generally very sharp.
Okay.
So we are expecting a sharp up move in this stock. There's a good base formed around 100, 102 zone. So one should start, creating long positions over here for a pullback rally. Targets are placed around 116 to 118 levels for traders, and stop loss could be kept below 104.
All right. You got ONGC as another one on your radar. Both Hindalco and ONGC are some of the stocks that are actually oversold. So is ONGC also looking likely for a technical rebound?
Yes, more of a similar to Hindalco only. It's been almost 1 year since even ONGC is correcting its highs, and it's now trading around its long-term trendline support. So it's 260, 62 is the zone where this long-term trendline is coming on. So one can look to buy in this range of 260 to 264. The downside is very much limited now in this stock, and I don't think the stock would correct much from current level. In fact, the value investors, long-term investors, would start going from long from here in this stock. So one can look buy this stock even from long-term perspective. Short-term traders can keep stop loss below 252 for a target of 285.
All right, Ruchit. Just before we let you go, very quickly, a call on some of those FMCG names as well. We've been watching out for Marico today. We've had a whole host of the other earnings come out. Dabur's on your list. Just talk us to the potential you're looking at there.
Overall, FMCG pack is still expected to do well. We have seen that in spite of market showing some corrective action, especially those stocks which of FMCG which are not in F&O, or even they're part of F&O, they're not much liquid. Those stocks are continue to do well. The cash market volumes continue to increase, and whenever up moves are there. So probably Dabur is one of the stocks which is forming this higher top and higher bottom formation. And in last 8 to 10 trading sessions, it has shown some consolidating action. So after this consolidation, we are expecting a resumption of the uptrend. So we are recommending going long in Dabur with stop loss below 280 and target of 310.
All right, Ruchit, we'll leave it there. Thanks so much for joining us. Let's take a very quick break. When we come back, Anish Damania, our market guru today, will be joining us with his take on things. Do stay tuned.